Hello, traders, and good morning, and wherever you are, good morning, afternoon, or evening. We are gathered for the US Payrolls Jobs Report for September the 1st. So let's get started. Again, if you have any questions, anything you're looking at, just type in the chat box and we'll take it as we go, and we'll be covering this live shortly. We have about 15 minutes to prepare for it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, so let's talk about what is the expectation. So far, you can see the expectation and the price action has been a little bit more on the negative USD. Looking at the Canadian, we have the Canadian GDP as well, but we'll be primarily focusing on the US employment report. So US employment report looking at 169,000 jobs are created versus 187, and the average hourly earnings is supposed to actually take lower, 0.3 versus 0.4, and unemployment rate supposed to remain the same at 3.5%. So this is where the big movements will happen if the number comes out is way, off the expectation, either on the upside or to the downside. A couple of things that really changed early this week in the price action here is that we got the ADP number that was much lower than expected, 177,000 versus 194. And on Tuesday, we had the Joel's job opening. Remember, this is a very sticky number. We haven't seen a big drop in this number till now. It's dropped it down to 8.83 million. So sort of a mixed picture overall in the numbers here. So we'll see what happened in this report, and based on that, we'll position ourselves. As always, whenever we are trading these events, we always ask the question to ourselves. What's the strategy? There's three ways to do it: enter on the news, before the news, or second stage. This is where every trader can be different, and you really have to decide which one works the best for you. Every strategy has its pros and has its cons. So there's no sort of a golden rule to this. You just have to stick with your plan and just make sure you're consistent with it. I always like to go in with some sort of my outlook, and based on that I can decide a strategy. This one I don't strongly feel about where the number is going to be. I personally would be looking at entering either on the news or a second stage entry. I'm not looking to enter before the news because things can really change based on that number. So it's really tossing the coin, being a 50-50 here. I rather want to trade once I see a little bit of initial price action and see where things are heading towards today. Every strategy, like I said, has some pros and cons. Slippage is one of the things that we want to avoid during these news events, especially when there's a lot of volatility. So make sure, this is where we use a limit order, especially if you're entering on the news instead of a stop order, since there's no guarantee that stop will fill at your stop price. Another thing is that we want to avoid is a whipsaw, and this is the price action that we hate there. You can have a buy stop and a sell stop. It triggers both ways, doesn't go anywhere. We want to avoid that. And this is where waiting sometimes for the initial price action to settle down kind of works, because you let this volatility ride out before you jump in. So, looking at this news event, I'm looking at either on the news or looking at a second stage entry. So let's get into our currency basket analysis and see where things are moving. So let's jump into TradingView. I want to point out that there's certain things that we want to consider when you're trading a news event. And right now, we are on at a Friday before a long weekend. It's for the Labor Day. We don't want to be holding anything, over the weekend. So we want to get out of a position overnight or earlier today and not really hold anything overnight. So our timeline is short on this. So two things we need to pay attention to. One is the momentum. Second is the sentiment. So let's just start with the sentiment here. For the sentiment, we always like to go to the equity markets and see what kind of price action we're seeing. Are we risk on? Are we risk off? So looking at the broader markets, this is the US 500, S&P 500. This is the features, and you can see that the price action is strong and is basing. And like I said, on Tuesday is where we got that big move off of that the job opening number. And since then, we just have sideways here. So if you really look at this from a technical perspective, this looks like a high base pattern to me. 4 hour chart, what is it showing? It's a high base pattern. A daily chart, look at that, where we were and where we are right now. We went from more like a -2 to now a +2. So market sentiment looks positive to me. So that's the first thing. Now let's take a look at the bond market. And now bond market has been pulling back. And remember, last week bond markets were going crazy on the breakout side here, but then we have pullback since. And right now you can see going into this event, the bond markets is actually pulling back. What does that mean? It means that the market expectation is not as bullish for this report. So everything's sort of lining up for a bearish report. Now, looking at the dollar, this is the third component, what the dollar is doing. And right now you can see the dollar is pulling back. So you can see dollar has been a very good currency on the long side. But right now, look where it is right now. So we are right at the prior resistance, which is the support, and it's right at that 20-day moving average. And the last 3 days has been quite choppy in decision, where it doesn't know where it wants to go. So initially, right now, you can see that it wants to go lower. So, but I want to see on the currency basket, I would like to see it break below the support area right here. So this is why I want to see what the initial price action is. We don't want to get whipsawed. Like I said, initially we're the price pushed lower and then start to push higher. We don't want to see that. If it's going to break, we want to see a nice clean break and then continue to move lower. So looking at everything, bond market, looking at the equity market, it looks like it's pointing out for a dollar weakness. But right now, like I said, dollar is sitting at its minus 0.07. Not a whole lot of activity ahead of this report. So we got this clear that where is could be a little bit weakness. So let's see what we can pair with. So let's go down to maybe an hourly chart because we want to be looking at where is the momentum right now. So let's start with the yen. Surprisingly, yen is actually showing strength. So there you go. Yen goes on the stronger list. Dollar is sort of a 0 to a -1. Swiss franc has been weakening, so we've got to continue pay attention to this. That the European currencies has been weakening overnight, from British pound as well. So all European currencies have been weakening. So where is the money going? That's what we're focusing on. Canadian dollar also weakening. Remember, Canadian dollar is tied to the US dollar. So whatever happened with the US dollar, the Canadian dollar is kind of following or mirroring that move. So you got to pay attention to that as well. And now lastly, let's take a look at growth currencies. And remember, these growth currencies has been horrible. Aussie and Kiwi. Look at that Aussie. Look at how choppy this price action has been. This has been a very frustrating currency to trade. And I've kind of pointed out in a longer term that, take a look at that. So remember, I pointed out this strong support and looks like it has reclaimed that support. We're still below the 20 to 50-day moving average, but it looks like it is once again trying to go higher from here. But it's not a clean V-shaped recovery. It's very choppy. So Aussie is sort of -10, so mostly flat for the day. Kiwi, on the other hand, is showing some relative strength. So here we are. Kiwi is on the strong side. Yen is on the strong side. And rest, we have European currencies, dollar, Swiss franc, euro, and pound. They're all on the weaker side. So it really kind of brings it down to only a couple of currency pairs, Kiwi. So Kiwi, we can pair it against pretty much where you want the exposure to be. We can take a look at Kiwi against the euro. You can see it's sort of weakening here. I like this, a break of that 20 moving average. Or if you bring it down to an hourly chart or maybe a 15-minute chart, we got the support right here. So 181.35. Now, looking at other currencies, let's take a look at Kiwi against the dollar, see how that's one's looking. So Kiwi against the dollar, you can see that it's not screaming buy, but for now it's showing some relative strength there. So this will be the first one that I will be looking at if I want to be short the dollar. Then this is the one. I mean, take a look at where the resistance is. Last time, 59.85. So if I really want to get in, I need to have a sort of a buy stop, above in this range right here, which is about a 20 pip away from here. I don't want to be putting a buy stop at 59.86. Probably go towards 59, 90 or 95. I want to be above this area. It's like I like to see breakouts to jump on those trades. So that will be my initial entry, and my initial stop will be about 59.60, which is right around the support or the moving averages are. So that's the one that I like it on the long side. Now let's talk about if the dollar is strong, what we want to trade. If the dollar is strong, it's showing that the European currencies are weak. So interestingly, look at the euro dollar, on a daily chart. It looks kind of weak to me, below the 20, the 50-day moving average. 4-hour chart is also pointing lower. So 107.81 is the level of support on this one. We're sitting at about 108.45. So if you want to look at the smaller area for the entry, then this is right below it. This is right here, 108.25. If it breaks below it, the first stop, first sort of a level to touch is about 107.80. So that's the one that it could, that looks good over here. So we are about 45 seconds here, 50 seconds here into the report. So again, the game plan is to look at the initial price action before we jump on. Like I said, euro dollar, I like it on the short side. Kiwi dollar, I like it on the upside. So that's the game plan. Let's see what this rolls down for us. Again, I'm not eager to make a trade right now. Remember, it's a long weekend. I would rather look at a good price action and then sort of build up next week. My timeline is short, so we don't want to be holding anything over the weekend and then go cash mostly. So we'll be looking at, let's actually do a split screen. We'll be taking a look at bond markets. On the left side, I have the US S&P. On the right side, let's put a dollar here. And then we can kind of look at the price action wherever things are moving. All right. So initially, looks like, all right, there's a lot of movement here. So initially, the equity markets are pulling back. And we are noticing, let's see what the dollar is doing, going a shorter term. Okay, so dollar weak. Dollar is showing weakness. The equity market is showing strength. So I'm assuming that this was, not a, let's take a look at the Forex factory here in a bit as well. And let's add the third component to it. Let's take a look at the bond market. I'm assuming that bond market is also moving down as well. So this seems to be a bearish dollar, bearish the bond market right there. Bond is going lower. So notice, let's put dollar back up here on the middle. So dollar and bonds, you can see how they're moving kind of cohesively together. Now looking at the equity markets, equity market had a nice little breakout here. So it's pretty clear where the initial price action is. Let's jump in for the Forex factory. So that was actually a better than expected jobs report. But look at that unemployment rate. First time it ticked up like 3.8%. Wow, that's if you look at the trajectory of the unemployment, this is the highest we've been since right here at this point. I mean, this is an uptick here. This is a change. So market's going to digest that news. Initially, it looks like market is looking at this news as a weak contender, but let's see how things kind of go from here. Again, this price action can it's initially it's just really on the downside for the dollar and for the bond yields, because this is where Fed needs to back off and say, hey, the unemployment is going up, so let's not change. Let's not continue with the rate hike. So that is the initial message. Now, the equity markets, right now it's still a bad news is good news for the markets. So what we need to see is that does the market hold on to the gains, or do we see a bit of a change of that, where market digests the news and say, well, no, this is actually the market, the economy is actually weakening. If you really look at this, economy is actually weakening. So this is where you got to watch out for this initial price action. Like I said, I think this could reverse once the market sort of digest that news and say, no, 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 this is not a good news. So that's where we are. So before we really jump on, like I said, what my idea is to look at 55-minute chart. You can, if you're looking to trade after the as a second stage entry, you can look at the first 5 to 15 minute, like either a 5-minute candle or a 15-minute candle. And what you need to do is that you need to let that candle settle out, meaning that let's see where the price action goes. So you can see big wicks on the S&P right now. The dollar is still weak, but look at that. Look at the yields are showing, um, are backing off as well. So getting a little mixed picture here. We'll have to see if the dollar does stay lower or does it retrace. But I mean, both the equity markets and the bond markets are reversing a little bit here, giving us some big wicks. So I need to get in. We need to get in when we start to see a sort of a continuation of that move, which is going to be, above or below. So once the 5-minute candle is printed, we'll have the high and the low, and then we'll see where it's going. But right now, as you can see, I'm getting a mixed picture. I'm getting a mixed picture because the equity markets are staying, um, are sort of backing off here, and so is the bond yields. So dollar could be the last one to join. And again, that's why you always have to look at the bigger picture instead of just a smaller picture. So that way you can decide which way things going. Let's actually launch another trading view window here so we can take a look at let's take a look at some other things as well without disrupting our chart. All right. If you have any questions, go ahead and type in the chat box. The other things that we were looking at, let's see how they turned out. I'm just going to turn into a different screen here. Let's take a look at euro versus the dollar. You can see that I had a nice move here. Not looking to jump on this one here. So you can see that the candlestick, it just closed on the top of the candle. So it seems like the dollar really doesn't want to back off here as much. All right. Let's take a look at Kiwi dollar. Let's see how the growth currency is doing. Kiwi dollar. Look at that. So this should move right there. We got a breakout right above it at about 59.86 is the level we were looking at, and it's sitting at about 60.07. So, this is where we got a nice clearance from this. The question really is, what's the right play right now? So, despite that wick here, the equity markets is still holding on the gains. The bond market having a bit of an inside candle here. So the dollar actually looks the weakest right now. But as long as it stays or holds on to the gains, then we know that that's the right play here. So yeah, so a lot of times getting the initial volatility out of the way helps. But again, like I said, everything has a pros and cons. Sometimes you miss the initial move. And if it continues to go in that direction, then you miss that initial sort of a easy move that you get, the bigger move. But there's always the pros and cons for that one. We could easily get whipsawed. That's not something we want to trade, especially on a Friday as we are ending out the week. So the dollar is looking weak here to me, and the equity market is also extending to the upside as well. So could this be a day where the dollar pair just continues to move higher? That's the question. So you can see that on this Kiwi dollar, it just hit that 60.10, And a lot of times, you look at this and say, you know what, let me just enter right here. The question is, do we enter right here or maybe just put a buy stop just in case I want to get in when it breaks out? I don't want to get in if this pulls back. I want to get in if it breaks out. Let's go back to our chart here. So you can see the bonds is sort of not extending the losses here, but the US the equities are extending the gains, and the dollar is just holding steady. And again, the best move come when everything's sort of aligned together. So what we can see, what we can expect here is that once we get this big push to the downside, this can follow with a sort of an inside candle, where it's a bearish engulfing candle here. We see a bit of a candle here, and then we continue to move lower. So let's see what kind of price action we get here. Still a little bit early. Like I'm looking at this, and I don't feel as confident about the direction here. So let's go back where we can set up our traps here. If this continues to move forward, what currencies we can play around. Like I said, we looked at the relative strength of weakness, and the Kiwi looks the best. Let's see what the Aussie. Let's actually take a look at Aussie Kiwi because that tells you. So in the shorter term, I mean, overall Kiwi has been showing strength, but in this little small move, Aussie actually showed a bit of better strength. But we want to stick with the direction here. So let's go with Kiwi. Let's go with Kiwi dollar. So initial entry, like we have this wick on this candle. What I like to see if this breaks above this level here. That has to be our buy stop entry. But we need to be quicker on our stop. So I want to see what kind of candle that we get here, and then we can use that as our initial sell stop. So if it breaks below that, if it continues to go lower, we don't want to be in. So yeah, that's the only one. I mean, take a look at the Aussie dollar doing the very exact same thing. But I think Kiwi dollar looks better to me here over the Aussie dollar. So yeah, this is initially good news for the markets. I mean, the labor market is weakening, which has held for a long time throughout this rate hiking cycle. But the big question is, is the bad news still good news for the markets, or is that about to change? So that's something we will be covering quite extensively in this upcoming after this into the fall trading here. September, October, November, and December is something that we will be looking at. Is the numbers are really weakening, and if the Fed backs off, remember, is it backing off for a good reason or is it backing off for a bad reason? And if Fed backing off for a bad reason, initially that could be met with, oh yeah, like, if the Fed's going to back off, but later on the trouble starts because they're backing off for the wrong reason. So that's why if you look back in history, every rate hike cycle that will end, they will end for a wrong reason, not for a right reason. So that's one of the things that I'm primarily looking at here. But as always, we talk about the time frame that you're trading. I'm talking a little longer term, but that doesn't matter. If your trade is only going to last for X amount of hours, if you're planning on exiting for the rest of the day, then we just want to get in and get out. Just capture the momentum and get out. So right now, as you can see, as I expected, it's reversing here a little bit. The bond yields are reversing here a little bit. So as you can see, there's nice little correlation here with the bonds. So those two things are kind of moving along, and here we are, equities pulling back. And like, take a look at the Kiwi dollar. See, that's why we didn't want to get in, because here, right, it just pulled back. So the big question here, I got a question about the dollar here. At what point do you think maybe dollar can sort of reverse? Well, what we need to see every time, if you see the whole retracement, the big candle that we have here, if it recovered if it recovered all that losses, then that puts a bullish case scenario for the US dollar. And in that case, I don't mind jumping into, let's say, the euro dollar. Look at that. Look at the Kiwi dollar is actually not retraced as much, but the euro dollar has retraced quite a bit. So I still like this on a short below this 108.30 area right now. Again, if this can totally reverse and goes lower, I think then we can actually see a lot quicker move to the downside in the euro dollar than we have seen to the upside. But right now, if you look at it, this is a 50-50. So let's take a look at Euro Kiwi. Maybe we'll have a maybe we have a trade here in Euro Kiwi. And you can see, wow, Euro Kiwi is showing more weakness. So it seems like if you want to avoid that dollar volatility, then Euro Kiwi actually looks really good here. All time frames. I mean, the next support is at about 180.54, sitting at about 181.07, and the daily chart as well. So we got our support here at about 180.54. But you got to keep in mind is that the Kiwi is more risk sensitive. So which means that if the equity does reverse, then there's a good chance that the Kiwi will give up some of the gains here. So that's why you always pay attention to the risk sentiment. Is it a risk on sentiment or is it a risk off sentiment? All right, looks like we're all on the same page here. I know it's a lot of traders are this is the last weekend before the Labor Day, and then we get back to the normal. I know this is the weekend where everybody's sort of taking it easy, and that's how where I am as well. We don't want to be stressing about a position, enjoy the long weekend, come back. But yeah, that's the that's the goal here. I expect a lot more better price action in the fall here, especially if the economic numbers are start to weaken. Remember, for the last year and a half, we have the same story playing over and over, which is economy's okay, but the Fed is tightening, and there's a bit of a seesaw price action there. But if the economies actually start to weaken and globally, I mean, we are seeing weakness in China. If the weakness comes in the U.S., and I think we can see some policy shifting as well, which again will cause much bigger moves. A lot of the things are already baked in. How much higher we can go in the interest rate. That's not the big trade here. The big trade is okay. Where can we go from here? So right now, as you can see, it's almost given up half of its gains. This is what I don't like. If I do want to, continue on with the initial direction, then we talk about retracement, Fibonacci retracements. This retracement is quite sharp. So if you look at, let's take a look at the dollar here. So this is where we were, and this is sorry, that's not the Fibonacci here. So again, if you look at the top of the move and the bottom of the move, you'll notice that it will be sitting at about a 50% retracement right now, and that's not a good sign. The lower the smaller the range is on a retracement, there's a better chance for that to continue moving in the initial direction. But the more it traces back, it lowers the chances for a continuation of that move. So the initial thing we need to look for is that it doesn't really fill that gap. Like in the dollar, you can see there's a little gap here. It doesn't fill that gap here. So right now, this still looks like a bear rally to me. That's the first initial thought is always. We got the big move, we got the retracement, and then we roll over. Now, based on how deeper the retracement is, that could change things. But as long as it doesn't breach prior levels, then everything still stays the same. But right now, you can see things are still indecisive here. So if you decide, let's say I want to jump on Kiwi dollar long, I'm looking at this as a 50-50 here. But that's where I think the price action is going to be um, if everything goes the way it initially moved towards. But the equities is not. Equities is where I think we already had a nice week going into this. So the question is that is the move already priced in, or is a bigger move to come? All right. So the question is, okay, if you don't get the initial entry, where would you enter next? So that's a good question. Where are we gonna look for an entry? Is if let's say if you don't get the its entry in the first 15 minutes. So what's the next sort of a countdown? And then that is the market open. 9:30 a.m. Eastern Standard Time. That's the next time that I will be looking at. Say I want to get in because that's where the energy will kind of come in. When the market opens up, we'll see market digest the news, and after that we will decide, okay, where is the active move continuing from this. Now look at the schedule here. After this we also have the US ISM manufacturing number. So again, this number can also move the dollar and move the needle on everything. So let's say if that number comes out weaker as well, we can expect some sort of movement in the equities and in the dollar and the yields as well. Right now the yields are showing more strength there, but the dollar is showing a little bit more of that weakness. And then we have the S&P, which have moved nicely up and sort of a consolidating here. So we could see some consolidation going into the US market open, or perhaps looking into the ISM, but that will be your next draw. Like the market open to ISM between 9:30 to 10, that's where the next sort of energy will come in. So you always need to just make sure that you have your planning done ahead. Okay, if this happened, where do I want to get in? If this happened, which currency want to get in? So right now, the Kiwi dollar is really the one that we have it on our radar here. On the other side, we have the euro dollar. So those are the two that you know we're continuing right now watching. All right. So what we'll do is we'll just wrap things up here. Again, we can sit here for long before we jump on an entry here. But again, that's just wanted to get you, kind of convey what my plan is. Looking at the prior lows and prior highs. If we continue moving in that direction, then we probably will have a continuation of that move. And in that case, I think the Kiwi dollar would be a better long. If the dollar reverses, then your dollar would be those are the two pairs I'm looking at. But right now, it seems like initially we got a back and forth, but things are sort of recovering here, which means that we could just continue moving higher on for the rest of the day. But ISM again, like I said, ISM could be the one that could change things. Also, we could see the market open could change things as well. But right now, look at that. The equity market is trying to break out. I think the dollar would kind of follow the suit here. The yields are not really doing much, but we just have to kind of watch and see where things go from here. But I'll be happy to stay in cash. Like I said, it's the first day of the month. It's the last weekend before the Labor Day. If you are not looking to hold position for longer, then there's no point in getting in. This is short term trading. This is looking for a move, get in and get out. It's much easier to do like early in the week where you can hold things for a little longer. But on a Friday, you need to be sort of decisive on what's the entry versus the exit here. I have another question for the dollar yen. Let's take a look at the dollar yen as well before we wrap things up here. Dollar yen is usually good for trading around this US number. And looking at the dollar yen, this thing has reversed quite nicely here. I mean, look at that 147. It almost hit, and it's almost given up the 20-day moving average. So at this point, it looks like it wants to head down towards the 143 area. Let's go on a 15-minute chart. Yeah, that's where the continuation is. So I don't really see a trade right now. I don't want to chase anything in the dollar yen, but I don't want to go long the dollar yen either. So I think we'll just stick with the euro dollar and the Aussie and the Kiwi dollar. And also, like I said, if you want to avoid that volatility, look, Kiwi dollar, the Euro Kiwi is actually doing decent as well, continuing with that direction. You just have to make sure that you have a good risk to reward on that trade and you get out and not hold that trade for too long. But I'm looking to be a little bit on the hold here. Look at what the equity just did. It's try to go higher and then boom, it just pulled back. The bond yields is not falling apart and the dollar is kind of right wedged in the middle here. So I don't like the sort of the price action here. This is what gets you in, and then totally reverses on you. Look at the Kiwi dollar here. We could have just triggered in if we had gotten in here. Look at that. It just made a little push higher and then pull back here. So so I think I'm indecisive here. I will just wrap things up here. If the dollar does reverse, then again euro dollar, some of the European currencies will pay attention to. But other than that, if you enjoy your long weekend coming ahead, looking very excited for this upcoming week and the fall trading, and hope all of you are as well. This is where volatility picks up. A lot more bigger moves happen. So get excited, and have your trading plan ready for this fall trading. Thanks everyone. Have a good weekend. Cheers.